Fed's rate hike has proved to be a booster for the crypto market. Welcome to the Daily Forkast, May 5th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. Bitcoin was trading close to the $40,000 mark Thursday morning in Asia after the Federal Reserve announced its biggest rate hike in over 20 years. We'll take a look at the market action plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with the moves around regulation in the industry. First up, Pakistan is taking a fresh look at the cryptocurrency sector. According to local media reports, the country's federal government has formed 3 subcommittees to discuss the future of crypto and related services. Members of the first panel include the State Bank of Pakistan, the Federal Investigation Agency, and the Pakistan Telecommunication Authority. The other 2 subcommittees include the representatives from the Ministry of Information Technology and the Securities and Exchange Commission of Pakistan, among others. Their proposals will be used by a committee headed by the Finance Secretary to help prepare recommendations on the future of crypto in the country. Earlier this year, the State Bank of Pakistan recommended a ban on cryptocurrencies, with one of the nation's largest banks responding quickly by advising its customers to avoid making crypto transactions. Meanwhile, in Kazakhstan, Bitcoin miners have been ordered to file status reports. The Central Asian country is attempting to get a stronger grip on the sector by requiring regular reports to authorities. Data that miners will have to submit includes everything from the locations of their facilities to their power consumption, number of staff, and planned investments. New miners will have to report 30 days before starting operations, while existing miners will need to provide quarterly updates. Anyone shutting down an operation will also be required to report the closure. Kazakhstan became the world's second largest Bitcoin producer last year after miners moved there en masse following China's crackdown on mining. However, power supply issues have made the environment for miners increasingly unstable in the country. You can find those stories and more at Forkast.News. Over in the markets, the US Federal Reserve announced its biggest rate hike in 22 years yesterday, and that saw the crypto market jump into the green. Forkast Lachlan Keller has more.
The Fed's 50 basis point increase creates a target range of between 0.75 and 1%, and it follows March's 25 basis point increase, which was the first interest rate rise since December 2018. Inflation has also climbed to its highest rate in 40 years in the US in March, hitting 8.5%, and Fed Chair Jerome Powell said something needed to be done.
Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down.
One expert told Forkast the Fed managed to instill confidence in the stock market as a result.
They've admitted there's inflation, they've admitted they need to get ahead of it. They've kind of, for the moment, put off the 75 basis points. They're saying that's something they're not actively looking to follow. But they've said that another 50 basis points fine. And I think that's what the market really wanted to hear.
Crypto markets also reacted favourably to the move, with Zilliqa leading the charge. It leapt 38%. The rest of the top 100 cryptocurrencies were also in the green, with total crypto market capitalization raising 5.4% and Bitcoin trading at $39,709, while Ethereum was at $2,940 as of Thursday lunchtime in Asia. However, fears remain that the Fed's move has come too late to prevent a recession, but Sullivan says that the situation in Ukraine and the COVID lockdowns in China, as well as inflation proving less than transitory than expected, have made the delay look worse than it was.
I think on the basis that they and most people accept that they're behind the curve, that's why we're seeing them act quite aggressively at this stage.
We'll be keeping watch to see if it really was the right move and whether the crypto market remains in sync with stocks longer term. For Forkast, I'm Lachlan Keller.
Apecoin, the native currency of the Bored Ape Yacht Club ecosystem, hit a high of over $26 last week amid debate about the coin's governance as well as staking mechanisms. And some of those staking proposals have drawn quite a strong response. Let's talk about how the new economy firms are shaping the conversation. Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform, joins in to discuss this and lots more. Great to have you with us, Mark.
Great to be here.
Now, staking is a way for ordinary traders and investors to earn a yield on crypto assets they hold. Why has it led to so much debate in case of Apecoin? Some say that under the current proposal, staking is just encouraging people to hold on to their Apecoins and not really invest in the ecosystem.
The original idea of staking was that you were going to be doing something with the tokens. So the tokens would be contributing to security in the case of proof of stake or some other mechanism. I think Apecoin has been criticized for this as well, very constructively by Kobe on Twitter. Is basically that the mechanism is really just a way to pay existing Apecoin holders a dividend or an income stream of Ape. And the goal would be to get some of these holders to stake, not be able to sell, earn these yield, and allow other holders to cash out to sell. And so that's not really contributing anything. It's kind of like a bribe to not sell, as has been described on the Twitterverse. And obviously that's pretty silly.
Over 10,000 Apecoin tokens have been allocated for Bored Ape and Mutant Ape NFT owners. Interestingly, if anyone wants to stake their ape, the coins and the ape are treated as separate entities, and the NFT can be sold without selling the ape coin. What do you make of this?
Yuga Labs, the company behind Bored Ape Yacht Clubs, they effectively had this hugely successful non-fungible token, and they had to turn that success, or they wanted to turn that success into something secondary. Also one where if you couldn't afford a BAYC, which, are 6 figures in price at this point, you could afford to buy a little bit of Apecoin. And so it's kind of seen as a way of expanding the culture. Sort of Bored Ape Yacht Club is a status symbol and a cultural symbol, but at this point, anyone can own a bit of Apecoin. And so it's kind of expanding that cultural group, and also it's enabling them to capture a different customer base. They had to do that, but they also had to not completely sacrifice or reject or not give value to the Bored Ape Yacht Club, NFT holders. And so there's this interplay between the two tokens that exists.
On the flip side, some say that linking the Apecoin to the NFT is higher risk, as in case of a hack, you lose both assets, and questions have been raised about the failure to ensure safe custody of Bored Ape NFTs so many times. What can the Apecoin DAO do differently here?
The reason why a lot of them are hacked is that this is bringing in a lot of new money, crypto folks, new to crypto people who have a lot of money to spend on these NFTs, and they don't have a lot of experience securing their assets themselves on MetaMask. When they come in and they see this type of interface, they're not aware of the risks that come with this type of interface. And so they're not able to say, I should probably be using cold storage. I should probably be using a ledger. Like, this is a large amount of money. I need to keep it offline. That's really something that's quite different about BAYC. It's not that it's any riskier than holding any other coin or any other NFT. It's just that they're high value targets. A lot of them keep them on their profiles on Twitter, and so they're easily identifiable. And then ultimately, they are not clued up on cybersecurity. And so I think this is where there is definitely an opportunity for education. There's a lot of opportunities. There's an opportunity for custody services. And this has really never been a problem before. If you think about people holding very high value digital assets in a very public way. There's a lot of people who hold a lot of crypto, but they're not public about it. There's a lot of people who've, been in the space a while, but they don't flex their net worth on their digital wrist, so to speak.
There's definitely a long way to go in educating people about keeping their digital footprint secure. Great insights as always. Thanks so much, Mark.
Thank you.
And finally, here's a sneak preview of the latest edition of Word on the Block, where we go beyond the headlines. This week, Anthony Scaramucci, founder and managing partner of Skybridge Capital, talks about transitioning from the traditional financial systems to a world powered by crypto.
But owning Bitcoin is a property right.
Right.
That is an asset that can be protected. Now, all the activities
They'll come around.
it.
They'll come around.
You think so?
I do. Yeah, they won't have a choice.
They're already doing CBDC. It's in soft rollout phase. It's probably already being implemented across the country, and we've been reporting on that. Where do you see a bifurcation? I mean, how does crypto kind of create a parallel system? And how do we need to prepare when we take a look at
again, just think about it from an extension of other technologies, right? We had a horse and a carriage. Then we had a horseless carriage. We made the migration over, and then we had to build roads and bridges and tunnel systems to carry those horseless carriages. And so this is the same sort of thing. You're in traditional finance right now. We have these protocols and procedures that can allow you to do things differently. You'll start to see that transition. You'll start to see the regulators catch up to it. And there will come a day where we're transacting with each other without that third party.
The full episode airs tomorrow, so do check it out. And that's the daily forecast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Forkast's Megha Chaddah. Until next time.